Now we'll discuss tracking labor in a job order costing system. To review, if an employee is working on a product, the cost of the employee's salary is tracked as a product cost, initially either as work-in-process inventory or manufacturing overhead. If the employee works directly on the product, like Willie the woodworker, the cost of paying Willie is considered direct labor and is added as a debit to the asset account called work-in-process inventory. If the employee does not directly work on the product, but is a factory worker, and therefore their salary is necessary to build the product, the cost of paying the employee is considered indirect labor and is instead added to manufacturing overhead. Later, the manufacturing overhead costs are allocated to the various jobs based on each job's size. We'll go into detail about manufacturing overhead later. Our examples of indirect labor are the factory supervisor and the factory janitor. Each are necessary to produce the guitars, but the cost of their paychecks cannot be directly tied to one guitar or another. So how do companies keep track of direct labor costs and know which jobs the employee worked on? Well, most companies now track labor using electronic time records. The employee swipes their ID card and enters information into a labor time record, which tracks how much labor time was devoted to each job. The cost of the employee's time is added to the job cost record, and because the costs on the job cost record represent work-in-process inventory, the direct labor costs increase the work-in-process inventory account with a debit. It's possible that a manufacturer could still use paper time records to assign direct labor costs to jobs, but that is rare these days. So let's say it's May 29th, and Willie the woodworker puts in 4 hours working on the body of the guitar for job number 70. Willie's paid $25 an hour, so that totals $100 of direct labor added to job 70's job cost record. So now let's see how that direct labor affects the T accounts in our workflow slide. Remember, the job cost record represents the cost of a job that is in the process of being completed. So the $100 of direct labor increases our work-in-process inventory account with a debit. Notice the accumulated costs of job 70 are now $300, $200 of direct materials, which is the wood, and $100 of direct labor to build the guitar's body. Now, the journal entry for recording Willie's wages would not occur until the pay period ends, but if you are curious as to what the journal entry would be, here it is. We would debit work-in-process inventory like we did on the previous slide for $100, and then because Willie isn't paid on the day the pay period ends, the credit account would be wages payable for $100. To keep the journal entry simple for our purposes, we are leaving out employee payroll taxes, and employer payroll taxes, and other employee fringe benefits such as health insurance. But keep in mind, these are also part of the total cost of labor.